sponsored by the Securities and Exchange Commission of Nigeria.
Hi, I'm Wale Famrewa and you're watching Eye on Nigeria's capital markets. The developments surrounding subprime mortgages in the wake of the 2008 global and economic financial crisis have given the housing sector a bit of a bad name. It's no longer news that a bubble in the US market was largely responsible for the crisis, and as a result, policymakers globally are somewhat hesitant today about investing large-scale into the housing sector, especially when it is widely supported by a mortgages industry. But in Nigeria, policymakers are coming together to design a plan for the housing sector, and in this episode of the program, we take a look at what to expect and how the capital market fits into the grand plan. Finding an affordable home in Nigeria can be tough work. This is due to rising urbanization and the poor regulation of rental rates in a market where demand far outstrips supply. Many observers have called for reforms to reduce high transaction costs related to processing, building permits, and transferring titles in real estate deals. These raise building costs and ultimately the cost of renting or buying a home in most urban areas. Steps to tackle these issues must start at a high level, and the government of President Goodluck Jonathan has recognized the importance of developing the housing sector by integrating the housing reforms into his economic transformation agenda.
That people have talked about how will things be different. I believe this is the first time that the Minister of Finance, Minister of Housing are working together to address the challenges that we have in the housing sector. Challenges of mortgage, access to mortgage, access to finance, the fact that demand exceeds supply. These are issues that we are going to address this time around. And immediately, here and now, we have set up a committee to work and address the issues of financing, access to finance, affordability, and provision of houses, so that we try to match demand with supply. Now demand is exceeding supply.
We need to invest in some real sectors of the economy that will help towards job creation. And it is known all over the world that the housing sector and construction is one area that creates hundreds and thousands of jobs for young people. Because you need all skills, from engineering to electricians to plumbers, and it has a lot of backward and forward linkages. So it can unleash other sectors of the economy, from architectural and building sectors of the economy, also to fashion and decoration and design. So it's really very, very attractive. But in addition, housing solves a social problem. So it's not just about the economy, it's also about people's needs and dignity for human beings who want to have a roof over their head. And I strongly believe a third factor in Nigeria is important, that if we can provide people access to mortgages to finance their houses, it will help reduce corruption. I know that one of the things, because we don't have a mortgage finance system, people look to scrimp and save and look for every avenue to put money together, to rent or to buy or to build. And I believe that if we provide this, we will also cut down on sharp practices and corrupt practices designed to provide housing.
The current support structures in the housing sector in Nigeria include the Federal Mortgage Bank of Nigeria, that seeks to mobilize funds for the mortgage market and administers the National Housing Fund. The Housing Fund is a contributory housing scheme that can be accessed by workers in the public and organized private sector at a concessionary interest rate. However, given the high demand and cost of housing in urban centers, the National Housing Fund is grossly inadequate to meet the needs of most Nigerians. As a result, most Nigerians seeking mortgages and home loans can only do so through commercial banks and private mortgage institutions at usually unaffordable mortgage interest rates in the region of 25%. However, the central bank and other foreign quasi-government institutions are looking to support the growth of the housing sector by providing low-interest financing to mortgage providers. A key concept that many observers think may be crucial to unlocking the low-cost financing required to move the housing sector forward in Nigeria is the Mortgage Liquidity Facility, a specialized financial institution designed to support long-term lending activities by primary mortgage lenders. The implementation of the concept in several countries around the world has been supported by the World Bank and its private sector arm, the IFC. These quasi-government institutions are also working with authorities in Nigeria.
Well, the simplest products is to work with the liquidity facility. That's a very simple institution that doesn't buy the mortgages as securitization would have and sell it to investors. But it's a very simple model that provides long-term funding. And it does that in a very simple way. It basically, the company issues bonds of its own and then uses those funds to on-lend to customers, such as the PMIs and then the commercial banks. And in that way, it takes long-term savers, such as pension funds, insurance companies, and other long-term investors who invest in the liquidity facility, and the credit quality of the liquidity facility is what they look to. And that takes, and it doesn't also need as much regulation around it. So that's a key link, is how to get those sectors involved in the mortgage finance market, and that's the link that the liquidity facility can provide. It'd be like in the U.S., the best example is the Federal Home Loan Banks, where they, quote unquote, refinance mortgages that stay on the lender's books, so the credit risk stays with the lenders, so they have to originate good loans. But what it does is provide long-term loans to those banks and PMIs such that they can go out and make more loans. You make more loans, more homes get built. More homes get built, it becomes a virtuous cycle. And there's the boom that you speak of.
Also, to help with the lower income populations, we are trying to support the development of housing microfinance. As you know, in many countries, microfinance is developing very rapidly. So what we are trying to do is to ride on this development to expand the range of services in the microfinance space, and specifically to develop housing microfinance loans that people can use to for incremental housing, repair, build a new roof, build an extra floor, build an extra room. This we find is very useful to improve the access of the population to a decent housing.
The current state of the housing sector in Nigeria is partly due to the absence of a well-articulated housing policy, which many observers indicate is the place to start.
You know, prior to this time, in fact, there was no housing policy. We have a housing and urban development policy. The urban development aspect of the functions of the ministry has never been brought to the fore. That is why people talk about slums, unplanned cities. So in the new document we have the guidelines for maybe upgrading a slum area, of creating new cities. And when you create new cities, you have to provide facilities, schools, hospitals, and things like that, or even renewing our existing cities. Some of them have not been planned, and so there are problems about facilities, about building a community of people living together. So these are issues that are addressed in the new housing policy. We also brought up the idea of having a regulatory body in the housing policy, a body that will be responsible for ensuring the standards of houses. What is the ideal size for a bungalow, a one-bedroom, two-bedroom, three-bedroom house? What is going to be the standard, the room size? What is going to be the standard of even the ceiling from the lintel of the houses? Some people build houses that is so low that if you can't even put a ceiling fan under it. So there is going to be a body to regulate and to assess those who are going to build for us. We don't just pick anybody from the streets to come and build. You have to make sure that there are people that can provide the standard, the quality of houses you need. There are also going to be a training for our artisans. Some of them are not skilled, and that is why sometimes the houses are of poor quality, of poor standards. We have a building code, but that building code is not operative yet. And we hope that by the time that building code becomes operative, we'll be able to address even the issue of building collapse. And because when it becomes operative, then there will be sanctions for those whose building collapse.
The capital market is playing a crucial role in the housing sector by providing the long-term funding required for real estate development. Several primary mortgage institutions have raised capital through the stock market, and private equity investors provide funds to real estate developers. Additionally, there are a number of real estate investment trusts, or REITs, which are specialized funds that pull together resources from different investors for investments in a variety of real estate and housing projects.
Real estate investment trusts are extremely important for the basic reason that right now a bulk of the financing in Nigerian real estate is mainly personal finance. So people can only finance their own houses. Aside from that is bank financing. Federal Mortgage Bank raised the bond at 17.25. Federal government itself is raising bonds at 15%, long-term bonds. So you have a situation where interest rates are extremely high. So financing real estate, especially residential or low-cost or mass housing, using debt or using any instrument that has a market-determined interest rate is almost, it can't work. It's not sustainable. You have private equity firms, you have some quasi-government institutions, and you have REITs. REITs are extremely important because REITs are the best way you can pull in resources together, pull in government guarantees together, pull in different features into a body and enabling that body to go out there and promote real estate.
Providing housing, particularly given the low levels of housing provision in Nigeria, will be transformational for the Nigerian capital markets. One, because of course housing provides shelter, but it also is a collateral that most people use for small and medium scale enterprises when they're trying to get loans. But it is also one where both for the primary mortgage market, the secondary mortgage market helps transform capital markets. It helps you extend the maturity or tenures that are available in the capital markets. It helps in analytics. It helps in people understanding the value and the benefits of fixed income securities, which tend to lend themselves much more easily for mortgages and for mortgage finance. The work that we've done over the last 2 years in fixed income securities is very, very important. Today, the federal government has bonds that are outstanding that are at least 20 years in terms of maturity. But other than the federal government, the highest maturity is 7 years. So the work that we're doing in extending maturity in fixed income is very useful in supporting the housing sector. The work that we're doing in providing liquidity in fixed income is also very, very important. We also have, as one of our agenda items for 2012, is a greater focus on private equity. What I perceive is that the housing sector is an opportunity for private equity.
Given the huge housing deficit in the country, the growth potential of the sector is not in doubt. But it will take the articulation and implementation of policies and programs that take into account the unique circumstances that the Nigerian market presents. As stakeholders rub minds and put this together, the capital market is bound to play an important role of bringing together fundraisers and fund providers if we are to truly transform housing in Nigeria forever.